There were a number of parts this quarter. So number one, the company changed the way they accounted for contribution profit. They put that information out there roughly 10 days ago. Many of the analysts had not updated their numbers, so there wasn't a clean report versus consensus. If you actually look at the analysts who did update their numbers on contribution profit, there was like a 2% miss in the US. It was still much bigger internationally. And then separately, the company is now focused more on paid subs versus total. And I think when people were comparing last night, they were comparing some apples and oranges. So, I mean, we looked at it as basically an inline revenue quarter and kind of, you know, basically these gains in pricing, they're going to raise the price, will come in the second half of next year, but they're going to spend against that in the first half. And they knew that, right, but we didn't know that. So, you know, you've got some noise. People will be updating their models, but net for us, we walked away saying, okay, we can raise subs 3% for the year, and we now think that in this year, U.S. subs will be up 9%, international 38%, globally 26%, still very strong numbers.
Their guidance for subs is obviously baking in this price increase, right? So, I mean, that's a domestic price increase, so it doesn't necessarily affect.
Correct. Well, they're not talking about obviously, they don't want to raise the price everywhere at the same time because it does cause churn, and they have a way they think through it. So the idea is, at any point in time, there may be a price increase in some country, some region. This year, it'll be the U.S.
So we're talking about net paid subs, right? That's good. That's the metric that Netflix really wants everyone to focus on. They're growing like wildfire. They're going to hit 150 by the end of this quarter. That's what they're estimating. When do they get to 200? Where in your model, how quickly do they get there?
I mean, in the fourth quarter, you had no slowdown in subs, right? In the guidance, it looks like they make a little slowdown, 1 or 2 points, right? And then most people will kind of assume it continues to slow. Where we're at right now for this year, we're looking at subs being in the end of period subs being at 175. So by the middle of this year, you cross the 150. I mean, there's nothing that looks like a slowdown. You know, the question is, you know, people are worried about the economy. They're worried about, I mean, Tiffany, you just saw talking about international sales. It's a question we have for Amazon. Is international slowing? This should still be countercyclical, right? This is a good deal. It's hard to think of a more economic way, stay home, watch Netflix, and go out. I think investors believe that, but we have to test that.
Does the dynamic change at all when Disney shows up at the party, when you see the investment from whether it's NBCU doing their streaming service or any of the
AT&T's, Warner Media, HBO, whatever?
Any of these multitude of competitors that are going to try to jump into this pool?
I mean, you know, Netflix for a long time has been disproportionately driven by original content, right? Now the focus seems to be original feature films. They want to have one, Hollywood
tentpole,
kind of a showcase,
a month, right? And if you say, well, even if I pay for the premium Netflix, the highest plan, it's still way cheaper than going to the movies, right? Or even paying for that iTunes download for that 1 month. And so that's what they're thinking in the U.S. Separately, they gave us a stat last night, the kind of not backed up with a lot of data, but they think they're 10% of screen time in the U.S. And if that's the U.S., imagine in the rest of the world, they're much, much lower.
But from just a consumer psychological or just sort of wallet, is there a moment at which you think families say, in a downturn, that I'm not going to have HBO, Showtime, Hulu, and Amazon?
So this is my question for you. I agree with that sort of framework, which is, do you think that price hike was strategic ahead of AT&T launching its service, Disney launching its service, so that you kind of lock in these customers so that once they do start to feel it in the wallet, they're like, well, I'm going to hold on to my Netflix. I'm not going to buy this new thing that's coming out from Disney. Was it strategic ahead of these other things launching?
Again, clearly, like they would say that this was planned, you know, many months ago, quarters ago, and they're not just reacting to what's happening in the media. We do know, listen, if the service you spend the most time with, you're least likely to drop. So clearly, if they can keep giving you more and more content, you're less likely to try something else. To your point, right? You know, if you think about some of the legacy paid services, HBO, Showtime, it used to be locking into your cable bill, and if you wanted to turn it off, there was a fee. You want to turn it back on, there's a fee. Now you can literally go month to month, and if there's a show you want to watch on HBO, turn it on the App Store, right? Then don't auto renew. And that's a dynamic actually that Netflix has been dealing with for a while, where people would literally go on, watch a whole bunch, turn it off, come back 2 months later. And they were paying to reacquire that subscriber, right, through marketing. And so really, like, they've been thinking through what the whole rest of the industry hasn't, is just saying we want to join that party.